In this class, I'm simply going to explain what management accounting is, what it does, and there will be a separate video to look at financial accounting and to distinguish that from management accounting. So in accountancy there are two parts, management and financial. This session I want to just briefly look over what's management accounting about. So to start, it's internal to the organization. It does not publish accounts. It is entirely focused on controlling the business and making decisions and getting the data from management to enable management to make good decisions. It facilitates decision making through the provision of information and analysis of performance data. So it keeps good records about costs, production, throughput, stocks, and out of all of this it has its own set of techniques. Management accountants have their own set of techniques which enable them to make decisions, informed decisions, which help management make more strategic decisions perhaps. The data may relate to the past, but also may include estimates of the future performance of some aspects of the business. So there is an element of forecasting perhaps involved as well. It looks at the past, looks at past performances, and perhaps extrapolates the past performances into the near future to give some sort of insight into what is likely to happen in the near future. More specifically, it's concerned with the following. It classifies and calculates the costs of production. Now that may sound straightforward, but in practice that can be somewhat complex. But it classifies and calculates the cost of production. It enables management, on the basis of its calculations, to more accurately set the selling price. So when management know what the costs are, and if they have knowledge of the precise costs, then of course they're able to set the selling price more accurately. They add their markup, their profit margin, and that's it. But if they don't have the information, if they don't know how much it's costing to make, then perhaps they can't make very well informed decisions. Calculating the cost of production can be complicated. Direct production is not bad. You know, the raw materials and the labour and so on, but overheads are complex, particularly if the firm is making many products. If it's making one product, then the overhead is included in the cost of that product. But if it's making several products, then the overheads must be what we say apportioned to each of the products. Each of them must bear the weight of the overhead. Each of them must make a contribution. And accountants have techniques for doing this, and they will be presented in another class. But for the moment, the overheads must be assigned to each product fairly on some basis. So that makes it somewhat complicated. So the fixed overheads have to be apportioned to calculate the cost of production. Cost accountants deal with this type of question and provide management with accurate costings that take all of the company's costs into account. At least that's what they attempt to do. And if they're not successful, it could lead to bad decision making and ultimately very bad for the future of the company. So cost accountants are extremely important within the business. Now, part of the data that's collected and analysed by the accountants, it monitors the efficiency within the organisation, and the accountants can then make recommendations how to improve the efficiency. So not only are they recording historic data and trying to analyse it and make projections into the future, that will help management, but they are also making recommendations to improve efficiency. So the management accountants compile budgets, and these budgets enable the management to control the business. Now, the budgetary procedure is the subject of several classes also, so I won't go into those here now. But setting up budgets and controlling the business through the budgets is very important, and this is a function of management accountancy. Now you'll note in all of what I've said so far, I haven't mentioned the balance sheet or the profit and loss account. I haven't mentioned the financial statements. Those are the outcomes from the financial accountants, and they are different. So management accounting is internal, and the financial accountants tend to be more outward looking, presenting the financial picture of the business outwards. And that's all I need to say about management accounting. So it's an internal process, and those are the issues they deal with. Thank you for watching.